Good morning, everyone, and welcome to today's session of Pre-Bell with William O'Neill India, dated November 7, 2023. So, before we go ahead, I would like to give a small disclaimer that registration granted by SEBI, membership of BASIL, and certification of NISM is no way guarantee performance of the intermediary or provide any assurance of returns to investors. Invest in security markets subject to market risk and read all the related documents carefully before investing. So, without taking your much time, and start with Nifty chart analysis. As you can see, yesterday's candle, Nifty had a good, strong gap up opening. After that, it moved in a sideways direction, and during the latter half of the day, again it came on momentum and just closed marginally above the 21 DMA. So in the past few days, Nifty is able to reclaim the 100 DMA and the 200 DMA as well. But as you can see, volumes have been declining, so which is kind of not a good sign. If we talk about the market status, we are currently in rally attempt. As you can see, after the good fall, Nifty was able to hold its recent lows for 1, 2, and 3 consecutive days. So last Tuesday, we shifted the market status to rally attempt. Now from here, we'll like to see an FTD, that is a follow through day, that is an up move of 1.5% on higher on volumes higher than the previous day. So if that happens and Nifty is able to reclaim its 50 DMA now going forward on above average volume, and going forward even the 21 DMA upcuts your 50 DMA from below, then the moving averages start moving higher. Then all of these are good signs, and if that happens, and if we get an FTD becomes the primary factor for taking Nifty from a rally attempt to a confirmed uptrend. Talking about key news, as the result season are going on, Hindustan Petroleum's Q4 FY24 PAT beats estimates. PAT declined 17.5% QOQ, revenue declined 14.5% QOQ, EBITDA margin expanded 30 basis points QOQ to 8.6%. Nykaa's Q2 FY24 PAT increased by 50% led by beauty and personal care, and revenue increased by 22%. Bajaj Finance launches QIP with a floor price of 7533.81 per share. Emami Limited's Q4 FY24 PAT declined 3.1% YOY to 178.5 crores. Revenue increased 6.1% YOY to 864.5 crores. EBITDA margin expanded 300 basis YOY to 27%. Maruti projects industry volume growth at 6 to 6.5% by year end. If we talk about the global market update, US markets was kind of closed on a very muted zone, as you can see. Dow Jones closed just 0.1% higher. Uh, S&P 500 by mere 0.2%, and Nasdaq Composite by 0.3%. Asian markets yesterday were trading on a positive zone. Today they're trading in a negative zone. Nikkei is trading lower by 1%. Kospi is trading lower by 2.8%, and Shanghai is trading lower by 0.4%. Talking about Gift Nifty is indicating a muted to slightly positive opening. Yesterday's close was for Nifty was around 19,411 and it's trading around 19,460 around 5 to 10 minutes back. And as you can see, if we go by what the Gift Nifty is indicating, we might open on a very muted, maybe slightly positive zone. Now let's talk about how the sectors are placed and how the broader markets have been placed. You can see both mid cap 100 and small cap 100 are under pressure at this moment. Realty is the only sector that is in rally, and banking, IT, the major heavyweight sectors, financial services, metals are still under pressure, are still in rally attempt. Auto and the others, such as FMCG, pharma, and your energy are under pressure at this moment. If you look from a sectoral point of view, only reality is the one which is comfortably trading above your 50 DMA, 11.5% above the 50 DMA, and 32.3% above the 200 DMA. Even uh, energy is doing pretty well. I mean, just trading 2.1% and 10.6% above the 200 DMA. The recent ones to reclaim their 50 DMA has been FMCG and auto. The other indices, such as your bank, pharma, IT, financial services, and your metals, are trading well below the 50 DMA. So, I mean, looking at them, it's not a good sign at this moment. And financial services is the only one that is trading below the 200 DMA as well. If you look from broader market perspective, your mid cap 100 and small cap 100, both of them at this moment are trading above their key moving average, that is the 50 and the 200 DMA, which is kind of a better sign if we compare it with Nifty 50. I mean, why sectoral annotations are important? Because it helps us to understand which sectors are in momentum and which sectors are able to probably recover the quickest, and from which sectors we can get the leaders at this moment. So at this, from here we can see that reality, FMCG and energy, and probably auto is the one that is probably recovering the quickest. And when going forward, if we get an FTD, or when market reclaims some key moving averages or even the recent highs, we know which sectors to look forward to. So thank you, and that's it from my side. And stay tuned to the space of Rebel with William O'Neill India from Monday to Friday